Good morning, everyone. It is a big earnings announcement day where we have some big names that have announced their earnings, like Novartis, McDonald's, Pfizer, PayPal, HSBC, and American Tower. Those are the stocks that I plan to cover on this live stream. Since they announced their earnings, we'll go over what they announced, how the stocks are doing, if they're going up or down. The market, I think, is trading already. So we can take a peek at that and see, are stocks going up? Are they going down? What is going on? So looks like at the open, I'm going to call it a little bit flat. I don't know if it's updated on Google Finance yet. Let's take a look at CNBC, see if they've got their numbers updated. And it looks like we're opening up in the red a bit. NASDAQ is down a bit. The Dow is down considerably. And then the Russell, it takes a little while for that to update. So we'll leave that alone. One thing I'll note is crypto has been really doing well. It's above 70,000. That $70,000 mark is pretty significant. If it operates above 70,000, it's somewhat breaking above that number. And I mean, it can go up substantially from there if it holds above 70,000. So I've got my fingers crossed. I do have Bitcoin in my portfolio, and it has been a very good performing asset for me for the last 6 years. So keep going, Bitcoin. And that'll help Coinbase, which is a stock I own. Oil prices are up a little bit, but they really fell yesterday, causing a big drop in a lot of oil related stocks. So oil is trying to rebound, but it went down quite a bit. In Asia, the Japanese stocks did well, but the Chinese stocks in the Shanghai exchange did not. They went down 1%. So that's what's going on around the world. The stock market's still in the red, and we'll see where it goes. I'll check, throughout the live stream and see where we're at. All right. So looks like Tomas, good morning. Very good to see your name. Hope you're having a nice day. Mike, very good to see you. Let's take a look at some stocks. I know some of you are stockholders of some of the companies I'm going to look at today. We have a lot of big names coming out. We've got Novartis, McDonald's, Pfizer, HSBC, American Tower, and PayPal is what I'm going to review because they've already announced here before the market opened. And after the market closes, we're going to have Google, Alphabet, Visa, AMD, Stryker, Chubb, and then Mondelez International, which is a food company, pretty big one. Be nice to look at that one. So, and then Chipotle. So I might live stream this afternoon. I'm going to try to, assuming everything else cooperates. And I'd love to live stream, especially since I'm a big Google Alphabet stockholder. So I'd love to jump into that stock. All right. So let's take a look at the stocks that I'm going to review today. Let's start with Novartis and see how that stock is trading this morning. So the market initially here, it looks like the market's trading the stock down, which is interesting. This has been a winner for it's only 28%. I would have guessed higher. I thought Novartis was doing great. Nope, not doing that great. So it's doing well for the 1 year. It's up 21%, and they pay a nice dividend of 3.38%. So that's a good year, very good year. And the company is a pharmaceutical company. They provide prescriptions, drugs, treatments for illnesses, and so forth. And these guys are a pretty big company, $233 billion in market cap. The revenue is nearly 50 billion, net income of 17.6 billion. The PE looks pretty darn reasonable, 13.27, forward PE 14.71. I believe Novartis is headquartered in Switzerland. So, and of course, they operate internationally. They sell in a variety of markets. So that's what's going on there. Okay. And this is interesting. I'm going to take a look at this headline. Novartis posts results above estimates and raises outlook. Those things are positive. Why is the stock trading down? Did the market really have an ambitious expectation that, hey, they're really going to blow away their earnings? We'll take a closer look. I'm going to open up their investor page and kind of get to the source of the information. Just taking a look at their information. And what I'm going to do is since I've got a couple stocks to cover, I went ahead and updated a quick little assessment schedule. And here is Novartis, and here's Pfizer, PayPal, and this one here is McDonald's. I forgot to update the symbol. I'll do that in a few minutes. But let's just stick to Novartis. So they've been growing their revenue almost at 9%, which is good because they're a very big company. Maybe the market was like, hey, we want you to grow faster like Eli Lilly. Maybe. Revenue, this is a big company, 49 billion. Their gross margin is really attractive. The cost of producing these medicines, drugs, pharmaceuticals, however they sell it, the incremental cost is really low. That's why pharmaceutical companies are so valuable, is the incremental cost when you get a new customer, a new patient, very low. So they get to keep a lot of that profit. I really like high profit companies like this. Net debt is 14 billion. EBITDA is 19 billion. So in less than 1 year, they can pay off all their debt. Very good balance sheet, strong balance sheet, good revenue growth, like their margins. I really like this company. Market cap's 233. Free cash flow is 15.4 billion. So you're paying 15 times free cash flow. Novartis looks like a good investment, high level. Got to do more homework on it. But overall, it looks like a good investment. Now, why is the stock market saying, hey, I don't like what Novartis had to say? Let's take a closer look. So I'm going to go straight to the investor page and take a look at their results and form my own opinion on it. So we're going to go English. So Novartis continues strong momentum in Q3 with 10% sales growth, which is a little bit higher than what they've been doing in the trailing 12 months, 20% core operating income growth. So their profitability overall is expanding, and they have innovation milestones. Okay. So in the quarter, their free cash flow is 6 billion, and that's higher than their trailing 12 months. So I'm just seeing green flags here. I'm not seeing problems. I'm seeing green. This company is healthy. It's strong. So their guidance. So they're going to grow double digit. Okay. Right now, they were growing trailing 12 months about 9%, a little less than 9%. But if they're going to grow double digits, that means their growth is going to accelerate a little bit. They're already a big company, so growth becomes harder as you become a big company. And these guys, I mean, I'm seeing good stuff here. Wonder why the market is selling them off. So I'm liking what I see in their earnings. And let's look at some of these stories. So they're down 3% on a day. What's the market doing? The market is down, but it's not down 3%. So it's not market driven sell off. And if anybody in the chat has a handle on why the market's selling them off when they posted what seems to be a very good earnings, that seems like the company is being operated really well, I would appreciate that. Right now, we just have this story which says that the earnings were good. That's my observation. The earnings were good. Did investors expect that they were really, really going to begin to accelerate their growth? Did one of their drugs, its key, not grow enough, and that's why the market is selling off? The long and the short of it is, with a company, with a um, very good pedigree, they're growing, they're profitable, stable, paying a nice dividend. Their PE is very attractive. This looks really good. So overall, Novartis is a very good investing idea as we look forward, because the healthcare complex, we're going to need it whether we're in a good economy, bad economy. Um, Thinking about the election, how would the election affect pharmaceutical companies? Um, I'm not going political. I'm just stating what I expect is, if the Republicans win the White House, pharmaceutical companies are going to rally because there'll be less legislation, rules, and so forth. Republicans tend to make things simpler, less rules. If the Democrats win the White House, it's a little tougher for pharmaceutical companies because there's more FDA oversight and so forth. I don't know that it's going to be a big factor on pharmaceutical companies, but I would say it is a factor. I would say that Democrats tend to press pharmaceutical companies a little extra. They're always, I think, one of their favorite campaign slogans is, "All these greedy pharmaceutical companies charge so much money when their gross margins are so good," but they neglect to say, "Oh yeah, this company had to put a lot of capital at risk through the whole research and development cycles, which could go really poor and really lose a lot of money." They forget to put that out there, but that's just how um, I see it. And I'm not making a political statement. I'm just calling the balls and the strikes. All right. So Novartis looks really interesting. I think it's a pretty interesting company. I do like that it's outside the US. I don't think I have enough exposure to Europe. I have one Europe stock, but it doesn't really count because it's headquartered in Europe, but their operations are in Latin America. And this one might be interesting to me. So I'm going to research it a lot closer and see if it's a good investment for me. High level looks really good. So Novartis, congratulations on a positive earnings. And hopefully the stock turns around, starts to rally for investors. Again, what I was surprised with, because Novartis, I thought, was keeping up with Eli Lilly a little better. Eli Lilly is off the charts. It's been doing great for the last couple of years. This one, not so much. It's just kind of been doing okay, but their performance looks like very good, very consistent. And let me take a look at. So they did have a couple bad years, but they weren't horrible years. And then they've recovered and they've started to grow. Interesting. Interesting. Maybe this is a good investing idea for me. I'll take a closer look, but that is Novartis. Let me catch up on comments here. Android PC, very good to see you. Good morning, Mr. Enkiter. And you're tuning in from Cyprus. Man, lucky you. Enjoy. Mike, looks like SoFi dumped. Let's take a look at SoFi. What's going on with SoFi? What is going on? And Zach, good morning. Oh, good afternoon from Europe. Very good to have you. Good afternoon. Shadow Guy. You guys have gone back 1 hour and then the US has. Okay, so I think our time change happens this weekend. So this Sunday morning, fall back. So we go back an hour. Yeah. We have Halloween here in the US on Thursday. that's a fun holiday. I really enjoy it, having the kids come by and get candy. And this year we've been invited to a Halloween party, so I went and got a costume and ready to go. Ready to go. It's gonna be fun. All right. So, and then Shadwick. So you're talking about Crocs, and thanks for joining. And let me see if I have time. I don't think I'm gonna have time to cover Crocs. Just high level. Crocs fundamentally always looks good. Their growth has been good. I just worry about the sustainability of that stock. It seems to be they'll do well for a year or two and then really crash. Their revenue really drops, and then they do well for they have kind of a bad couple of years and then a couple of good years. So I would do my homework on that and assess, get in at a good price and assess how good that stock's going to be going forward. Then Mike, you happen to somewhat agree with my earlier comment that yeah, pharmaceutical companies, oil companies, companies that want less regulation, they like Republican administrations, and uh, other industries benefit from Democrat um, administrations. We'll see who wins the White House. I'm here to tell you, I've lived in the United States my whole life. We've had Republican presidents, we've had Democratic presidents or Democrat presidents, and I've done great every single year. Okay, so um, I don't really care who wins. Once we get that decision made, we'll proceed forward, and hopefully that president does a good job and cares about the country and takes the country forward. We'll see what happens. All right. So the next company that we're going to take a look at is McDonald's. All right, so we all know who McDonald's is. You may have eaten breakfast or lunch or who knows, dinner, depending on where you are in the world, at a McDonald's recently. I have not. And I talked to, I think it was on Friday, I talked to somebody who wasn't feeling really well. And he was worried that he ate at a McDonald's and he was afraid he maybe ate a E. coli infected hamburger, and he wasn't feeling too well. So hopefully he feels better. But that's a big problem McDonald's is faced with. These food poisoning situations for restaurants will really change, consumer sentiment toward that restaurant. I know I'm staying away from McDonald's, and I think my immediate family is staying away from McDonald's. I'm going to give it a couple months before I go back. And I'm not a big McDonald's customer, but I would just say sometimes it's super convenient or it's late at night. I was really busy. I didn't get dinner, so stop by and it's a very quick bite. So we'll see what happens with the E. coli. Now, with regards to their earnings, let's take a look at see what other commentators are saying. So their revenue did grow. They were able to grow their revenue, which was a big concern because they were beginning to really flatten their revenue and actually decrease revenue. So let's take a look at their financials real quick. Looks like they loaded, good job, stock analysis. They load information very quickly. I'm very impressed with that because the earnings were just announced an hour ago, and it's already loaded on their platform. In the quarter, they grew 2.72%. And this is a pretty big revenue number to grow. So good job growing that number. Now, how did the E. coli number? So the E. coli issue happened. I'm not sure if it happened at the beginning of Q4 and if it's going to affect Q4. I think their Q4 number is going to be affected. I would not expect them to grow in Q4. I think customers are going to stay away from McDonald's. I think some customers don't care. They're like, oh, they probably fix the issue. Some customers like myself, I'm like, yeah, I don't need to, have E. coli in my body and, deal with those health hazards. So I'll probably stay away. And I think there'll be a number of people that might think along those lines. But they did really well for Q3. I think that's a good number. And for the most part, they've been a consistent operator. They're mostly, they don't necessarily operate restaurants. They're more of a call them a real estate investment trust where they own the real estate and they have these entrepreneurs who really do the work at the franchises, and they do a phenomenal job. They work really hard. A lot of respect for people that own McDonald's franchises and operate them. They make a good living, but they certainly work really hard. So this company, McDonald's, is it owns, the name, it owns the real estate, and it has all these entrepreneurs operating restaurants. So you could see that, their growth is there. And then their gross profit, I'm going to show you something that's really interesting. It surprised me. So this is McDonald's. And their revenue growth over the trailing 12 months has been 3.7%. Nice revenue. But this number surprised me. Their gross profit is 57%. If you compare them to other restaurants, that's much better. And it's because they're not operating the restaurants. They're more of a real estate investment trust that's, you know, uh, leasing out that real estate to the entrepreneur who's actually operating the McDonald's franchise. They're also sourcing and developing the food products, and then they distribute them, sell them to all these franchisees. So that happens to be a pretty profitable model. And that happens to be very well liked by consumers because their market cap is 213 billion. Now, when we look at their EBITDA, one thing that I've had a little concern around McDonald's is debt to EBITDA is above 3. So that is the balance sheet's not great. It's not terrible. It's kind of like passing with a C or a C minus. Okay, you pass, but it's kind of, you don't get any worse, because if you get any worse, then you're going to be in trouble. That's a lot of debt to be carrying. But overall, the business is growing. It is an expensive stock. If you look at free cash flow that they produce, you'd have to multiply it times 29 to get to their market cap. And you think about a slow grower, it is a very well-known name. That's a pretty good premium to be paying. It's not the right investment for me. I like more like Novartis. It's 15 times free cash flow. That's pretty reasonable. And their PE is really low. Their debt is really low. It's like, man, there's a lot of good stuff there. So McDonald's to me seems a little bit expensive. They had a good earnings. All things considered, if they had come in with a bad earnings report, I think the stock market would have piled on because they had the E. coli issue, and then bad earnings. They would have been like, oh man, let's beat this stock up and sell it off. But nope, it was a pretty good earnings report, and their stock's only down a little bit, tiny bit. The stock has worked for investors. If you consider a 52% return over 5 years, you add a dividend, I'm going to guesstimate that adds another 15, and compounded maybe 18%. So you're dealing with about a 70% return over 5 years. That's not bad at all. Especially if you consider this is a stable industry. Your expectations ought to change with the type of investment you're making. If you're betting on a small company, maybe a biotech company, and you're like, man, it's a risky stock, but if they make it, I'm going to 10x my money. That's a big risk with potentially a big return. But at McDonald's is, hey, we know what McDonald's does. They're going to keep growing a little bit at a time. Everybody's going to continue to eat at McDonald's. It's a safer investment. So your rate of return is lower. Your risk is lower. And a lot of investors go into McDonald's for that security. They're comfortable investing in McDonald's. So McDonald's is having a decent day considering that they're dealing with a big food poisoning problem. So congratulations, McDonald's. Way to go. All right. So we covered Novartis, McDonald's. Let me take a peek at comments and Shadow Guy. So you picked up 100 more shares in Novartis. Very good. I think the fundamentals on Novartis look good. So, All right, now let's talk about Pfizer. Pfizer is a stock that I the data I took a glimpse at it, and it's doing what I think is is a sign that the company is on track for more prosperous days. Let me get into that. So they announced the stock is down a bit. In general, let's take a look here. So earnings crush estimates as company raises guidance. So that's a second pharmaceutical company that has had a positive announcement and their stock. Well, what's going on? It was down. Now it's up. Well, okay. That's fine. Um, it's a big cap, 162 billion. At one point, they were much higher. Wow, the stock's really swinging up and down. See if I can get more clarity on Pfizer. So, stock's down a little bit, which is a surprise because the earnings announced were quite good, and I'm gonna get into them in a bit. For the current year, the PE is 38. Forward PE is down to 11. So next year, 2025, this PE is really, really low, which I believe is going to allow the stock to really expand its stock price. Dividend is really high. Okay, let's see if we'll see if they can afford that dividend in a bit. Analysts think it's a buy and it's discounted by 17%. All right, so we'll take a look at the earnings announced directly from their investor page. But before I do that, let me look at their fundamentals, just high level. Now, this company, they had a boom period for COVID where they saw their revenues just really jump up. They more than doubled the business, and now the business is not selling vaccines for the big pandemic, and now they have to just sell everything else. Now, the one thing that I look at a company is look at their quarterly when the business is really, in this case here, readjusting to a post-COVID era. And this is a huge number to me. Revenue growth of 33%. 33%. That's really good compared to the Q3 2023. So that's a really good number. I'm very happy with that number, being a stockholder. So good job. Good job, Pfizer. Their profitability is, I did that for Pfizer right over here. And their profitability is 69%. Again, not quite as good as Novartis, but really good profitability. That's why pharmaceutical companies historically have been valued really well is, hey, look at that profit. They really make a lot of money. Once they have successful drugs, they get a patent and competitors can't copy that drug and they're able to sell it at a very low variable cost after they've invested all the money in R&D, which could be quite risky and expensive. And they get FDA approval, and then they go to market with their drugs. So very good profit. That revenue growth, it just really, really made my day, I guess, for the stock. That's a very good revenue number. So, all right, we took a look at revenue growth I really like. I'd like to see what else they put in their earnings. They usually have a pretty big investor package. So let's take a look at their investor page, see what Pfizer reported, more information. So we're going to look at their press release and we will look at their presentation as well. Presentations are good, but you got to kind of sift out all the like marketing. All right, so Pfizer reports strong third quarter and raises 2024 guidance. Okay, double digit growth. So full year should be between 61 and 64 billion. Okay. I'm going to note that because I'm going to compare it to the run rate of 2023. Then we can, say, hey, they're going to grow for the full year 10%, 20%. What is that growth rate? So that's 61 to 64 billion in sales for 2024. All right. So good growth in the third quarter. And looks like these drugs were big contributors to that growth. Okay. They did benefit with a lot of people have been taking COVID vaccines. COVID has been continuing to infect people, and it hasn't been like the actual COVID virus hasn't been as deadly as harmful to people, but it's become more contagious. And I personally know people that have gotten COVID, and it's hasn't been as bad, but it's kind of like a flu. So people have been taking the vaccine that way. It's kind of like the flu, right? If you take the vaccine and you do catch the flu, you won't, be as you won't be down as bad. You won't get as sick, and that's what people are doing. So interesting that they're selling more COVID-19 vaccines. That's been a performance enhancer for them. So that looks good. Revenues is the highlight of their earnings. And I think that they have changed the trajectory of revenue. Obviously, after COVID, in COVID times, they were selling COVID vaccines really, really well. And then after COVID was over, they weren't able to sell as many vaccines. So the trajectory was negative, revenue is going down. I think that really affected the stock. Well, now the trajectory is on the upslope, which is great. So keep it up, Pfizer. I'm hoping these guys give us some financial statements and I can dig into those. We got earnings per share. Again, they pay that nice dividend. So I like the fact that I'm locked in at a, above 5% dividend on this stock. If the stock rallies, that dividend is going to change, right? If the stock price doubled, then the dividend is going to be like 2.5. But that's what's cool about buying a stock when it's really discounted is you benefit two ways. You see the appreciation in the stock and you lock in a really nice dividend. Hopefully that's the case. All right. So they continue to invest in research and development. All right. So good earnings. Now, I'm not reading every line. I will after I have some time here later today. I like when earnings reports have a lot of good information. Some earnings reports are like a 1-2 pager. That doesn't give you a whole lot. So these guys really probably overdo it. Hopefully they put some financials down here. Let's keep rolling. Here we go. Okay. So the quarter was fantastic. Year to date now, they are officially growing the company year to date, but the quarter was a boom, 31% growth. Good job. Trying to get to a balance sheet and a statement of free cash flows and see if they provided it. And I don't think I'm going to get one. So they just provided an income statement in their release. And I've covered Pfizer for a little while. If we look at their the slides they provide, it's gonna align with what we just saw. I don't think they're gonna give us any financials. That's really what I like to look at, and they're not gonna provide it. You can see that they just provide everything more in a visual. This is useful with the guidance. Okay. All right. So I'm going to go through this later, really dig into it. For now, let me look at my valuation of the company. And before I do that, let me look at their run rate for revenue. In 2023, they were a $58.4 billion company. So if they're going to their total sales for 2024 are going to be between 61 and 64 billion. So if it's low end like 61 billion, that means they're going to grow by $2 billion, and that would be about a 3% growth rate. Whereas if they grow on the high end at 64 billion, that would be a 5%, a 5 billion revenue growth, and that would be about 8%. So for the year, that's going to be their growth, 3 to 8%. Now, this is a turnaround year. You can see that their revenue really expanded during COVID. The trajectory went negative, but now they're beginning to expand. I think that's really going to change the psychology behind this stock. When investors see that, whoa, they're really growing their business, that's going to change, I think, the opinion on the stock. I've got my fingers crossed because all else looks good for the stock, in my opinion. Let's take a look at my valuation. I do go deep with this stock. It's one of the stocks that I own. So let's take a look at my valuation of Pfizer. All right. So overall, I'm not going to change the free cash flows because I'm actually using an estimate. And the reason I'm doing that is their numbers are so dynamic. Like during COVID, they were generating 30 billion or so free cash flow, where I'm not going to use that number. And they've had an adjustment year in 2023. So I didn't want to use that number. So I took more of their pre-COVID numbers, kind of made my own estimate, and started with about $9 billion. I think that's a very good run rate that they can achieve. And using that number, I value the company. I get a net present value of all those cash flows of 246 billion. I add cash, take away debt, and it shows that the company is discounted by about 16%. The earnings per share is going to be very good. They guided to 245, and just using a PE of 18, the PE is really going to drop next year. And I think that's an opportunity. I think investors are really going to jump into the stock. And overall, I think the stock's discounted by 36%, pays a nice dividend. So I am happy to be a Pfizer stockholder. I'm probably going to buy more shares of Pfizer. Right now, I own $36,000 of Pfizer, and I'm probably going to buy up to 50,000. I wanted to see that earnings and confirm that the company is going to begin to grow. If the company grows, good things are going to happen for this stock. So I'm going to buy up to $50,000, and I think that'll be a good milestone to achieve, and go from there. I think the company announced a very good earnings, in my opinion, and I like what I saw. So that is Pfizer. All right, let me take a peek at comments. Yeah, you're right that McDonald's does own a few of their restaurants, but if you look at the corporate owned, it's a small number. Most of them are franchisees or franchised. And then reading news in Novartis. So one of their drugs, it was disappointing that it's not growing. Maybe investors thought, well, that's going to be the growth catalyst for the next 10 years or 5 years. That could be it. But, sometimes investors in the market overreact to one variable. Not sure if it's an overreaction or if it's, oh no, that was a really important drug. I'm going to look at it on my own because I'm seeing really, really good numbers in Novartis, and um, I like a lot of things about the stock. So thanks for pointing that out. All right. So we looked at Pfizer. Now let's take a look at PayPal. What's going on with PayPal? So they announced, and boy, this stock's really getting hammered. It's down 5.83%. PayPal has been beat up quite a bit over the last couple of years. And if you look at the stock, it was riding high in 2021 and it was selling above $300 a share. Now it's down to $78 a share. Now, more recently, it was doing quite well. It was really, having a very nice run over the last couple months, starting in July. It really had a very nice run. It went up from $57 a share up to now 78. And let's take a look at what they announced and see why the market's really punishing the stock and what's the market doing overall. So the market's fairly flat. The Nasdaq is a little green, S&P is a little red, Dow is now green, very good. And then the Russell, which should be a good number, is down quite a bit. It's 0.74. Okay. So let's go back to PayPal. Man, down 6%. What is going on? The PE is reasonable PE, forward PE, market cap of 80 billion, and then the revenue $31 billion. So they had mixed earnings. So it seems on the headline, right? So when you see a term of profitable growth, to me, I'm interpreting that and saying, well, you didn't grow the top line as much as you wanted because you really want to make sure you're selling the services that you deem to be profitable enough. You don't want to sell any money losing revenues. Okay, that could be a good reason to do that. So their numbers for the last quarter closed are already in. Let's take a look at growth. So you can see that growth did go down. So growth was 5.78, and in Q2 was 8.21, Q1 9.36. And they've been a single digit grower, 6 to 9%, and now they're back down to about 6. So I could see that there is disappointment in that number. It would be good to see that number grow. I think the economy's doing okay, especially for a PayPal. We keep hearing that the consumer's spending, that the consumer is okay. So wonder why they couldn't grow. Okay, so their Q4 is their biggest quarter, I think, because the holidays, people shop, buy, they use their PayPal account to buy stuff. So that should help them. All right, so cash flow, let's see. Yeah, they did load the cash flow number. So free cash flow is expanding for PayPal. That's very good to see. Their best cash flow number is in the trailing 12 months. That's very good. So maybe the whole, hey, we want to be a profitable entity explanation might be a very good reason to be adjusting the company. So that is interesting that PayPal had a very, very good free cash flow number. I did put their information into that quick valuation. Let me look at. Here is where I looked at PayPal. They're growing at about 8%. Their gross profit was 40%. That's the lowest of the 4 we've looked at to counting PayPal. And they actually have more cash than they do debt, by the way. Their balance sheet's super healthy. So they they can pay off their debt just by writing a check. Very, very strong balance sheet. Market cap's 85 billion, and it was the lowest free cash company um, of the bunch. You would multiply their free cash flow by 12. So I continue to be a buyer of PayPal. I'm an investor in PayPal. I like their numbers. It's, I think they're going to continue to rise, and especially internationally. PayPal is pretty strong internationally. So I like that about them. When we look at their stock performance, again, from the July timeframe to this point, it's still up 36%. So that's good. It's very good. I've got a substantial investment in PayPal. So I've got $62,000 in PayPal. I was doing better up until that 6% haircut. But I think that's it. I like PayPal. I like being in a financial services, payment slash new generation financial services company. Their Venmo business is really, really popular, and that enables them to get more users of their platform, as well as their legacy PayPal service, the original service they've done. That continues to be a really solid platform. I continue to use it for business transactions. So it's interesting that the stock is selling off so much. The earnings doesn't seem that terrible to me, but PayPal has been a stock that um, the market has quickly sold off. Like, just sell it off, and like at one point it was a stock market darling, right? Maybe that's one of the risks that you have. Um, if you do get your stock run up, and it ran up to $308, and if you think about where stock investors went with their investment, I mean, you have a run up of 255% over the course of what looks like less than a year and a half, and then it drops. I'm sure a lot of investors got hit. They got really hurt when their stock went down 82%. So they probably swore the stock off, like, man, I'm never going to buy PayPal again. I lost a lot of money. And I can understand that. But I'm more of a, hey, I want to buy a solid company that is discounted, and then watch the stock, go up in value. And today might be an opportunity to buy some shares in PayPal. And I like their free cash flow. I like the valuation of the company. I think it's going to continue to move up. So I'll use today's selling in my favor, and pick up some shares. Wow, it's down 6.72. Holy smokes. Holy smokes, Batman. And the rest of the market's just flat. So it's not like a market driven sell off. So this is interesting. I'll buy more shares. I'll probably be more eager to buy Pfizer shares, because Pfizer, I really like the Pfizer earnings announcement. That top line revenue, that's saying, hey, Pfizer is going to be doing well for a couple of quarters. And I'm really going to load up on Pfizer quickly. I'm going to buy some shares of PayPal, but not at the same pace as Pfizer. Maybe add some shares at this moment and see what the market does. So that is PayPal. All right. We are 4 down, and I've got a couple more to go. But I want to take a look at SoFi next, because I'm curious to see what's going on with SoFi based on Mike's comment. And okay, so hey, Trader Prad, what's up, man? Good to see you on. And I'm going to try to catch your live stream tonight at 8 p.m. Eastern. See what's up. Tomas, you think PayPal is a solid company? I agree with you. Let's see how things play out. And then Yuda, you think it's a bit of a Re- uh, yeah, it's a tiny bit off revenue on PayPal. Mike, SoFi dropped. You picked up more shares. Okay, let's take a look at it. I know SoFi has been a stock that I've been a non-believer, but I'm going to try to be impartial and just kind of look at the numbers and see, is that business going to be far more valuable in a couple of years, or is it not going to be that valuable? I'll form that opinion. It's just one opinion, right? I could be wrong. So, all right. So we went over these big dogs. Now let's take a look at SoFi. So SoFi is like a new generation financial services company. They're down 7%. Um, so the SoFi stock looks poised to keep roaring after earnings. Loan volume surge. And they were profitable. That's good. So why is the market, man? Is the market just selling off financial services? Let's take a look at something real quick. No, financials as a sector is up today. Okay, so it's not that the sector is just crashing and burning. It's PayPal and SoFi are being sold off. So this stock, over the last 5 years, it came out and it had a lot of attention. And I'm in Los Angeles, so we have SoFi Stadium. It's an awesome stadium. Um, and uh, and then after that, it's really hasn't been doing great for 5 years, but the 1 year looks pretty darn good to me. Up 51%. If you're buying at the right times, boy, you're really, really benefiting. So that's going on there. Let's see if they loaded. Yeah, they loaded financials there. So it's an 11 billion market cap company. So in my book, it's a small cap, and revenue is 2.5 billion. They're profitable now, which is a very important milestone. Like once a company becomes profitable, that's very good. It's a buy, but you're paying a premium according to analysts. All right. So if we look at their growth, their revenue growth is fantastic, 31%. If you look at the trailing 12 months, if we look at the quarterly, it is fantastic. The revenue in Q2 slowed down a bit. So now they've really picked it up. Very good job. Very good job, SoFi. So that looks good. They are profitable. That's a very, very important aspect to their business. See, they were unprofitable a year ago, and then they made the turn, and now they're operating at a profit. Okay. So I'm gonna look at their book value with banks and companies like that. I like seeing their book value, and their book value per share is kind of staying flat. For a bank, you want to see this expand. You want to see this grow. And you want to see that your book value per share is far higher than the stock price of the company. In this case here, the stock price is higher than book value. This is a new generation company, so it may not be the right thing to do is compare them to metrics that I would use for a bank. But that's kind of like the challenge with some of these new companies that are really unique. Which category do you put them in? I continue to put SoFi in the banking industry because they're making they're assuming a lot of loans, they're making a lot of loans, they're trying to have net interest margin, um, you know, uh, performance, and that's why I put them in there. The way stock analysis puts them, yeah, they put them into metrics that you would see for a bank. So net interest income is here. This is their loans that they made to customers. This is how much interest they paid on the capital that they had to use for those loans. And the difference is how profitable they were on the loan portfolio. They have other revenue, and then they have loan losses. So no loan losses. Very good. No additional incremental loan losses. So company's growing. Very good. Good job. So I think one would have to dig into SoFi and understand what is going on. What is the market freaking out about? It's an 8% drop. That is substantial on a day when the rest of the sector is flat. What's the market freaking out about? Is it a buy opportunity? I'm a little bit, you can see all the financial services companies I own. These here, I've got plenty invested in financial services. So I'm not eager to get into another financial services company. I'm good. I'm buying into Ally. I think that's a really good opportunity. That one there is like no brainer. It's going to go up. I've made money on Ally before. I think I'm going to make money on Ally again. That's where I'm growing my investment. I continue to buy into Allstate. That is a money making operation. I like their performance. I continue to like their policy prices continue to go up. So they're just going to continue to be more profitable. I know the consumer doesn't like it, but the stockholders do when we get to make money. Now, the consumer quickly forgets that Allstate 2 years ago was losing money on policies. And so does the government. Now they're like, oh, these insurance companies are jerks. They're making too much money. All right. So SoFi, it's worth digging into it, seeing what is going on. What's the market freaking out about? The company is growing. Are investors non-believers in the strategy? I would have to revisit the strategy and, what are they trying to accomplish? Is it something that's going to be, they're trying to take over a part of the financial industry. And the question I would have is kind of understand it well. And then is that part of the industry worth having? Is it the best part of the industry? Is it where the money is made? Like Robinhood is carving out their space within brokerage services. That's very profitable. And I like what they're doing. So that's an example of, I really believe in that strategy. I think it's a good strategy. PayPal is also carving out a part of payment processing, and they do it a little different than Visa. And I like that business model. I would have to be comfortable with SoFi. And frankly, I don't see it as clear as I see it with Robinhood and PayPal. So I'd have to revisit it and kind of get to know it. But that would be my comment on SoFi. Good luck with it, Mike. And hopefully it turns upward. So Trader Prad, DJT just had a halt fest today. So what's going on? So that's the Donald J. Trump stock, right? Well, the stock price isn't moving a whole lot. Wow, cool. Look at that. So it went from $12 a share to $46 a share. I think the probability favors Donald Trump. And if he's president, this platform is certainly going to be worth more. And that's what's causing the stock to rally. Interesting. So it gapped up 20%. Now it's down 4%. Wow. Maybe I can see that better here. Yeah, I see what you mean. It really went up and then it came down. Wow. Yeah, these stocks, this isn't my game. Every time, like, sometimes I win, sometimes I lose in trying to predict something that's so short term. Um, my game is more long term. But if somebody guessed right on this one, they're sitting pretty over the last month. They've made a lot of money. So hopefully some viewers that are on this live stream are in that boat and you made lots of money on this stock. All right, so let's keep rolling. I wanted to cover two more stocks, kind of high level. HSBC is I think this is Hong Kong, Singapore Bank Corporation, I believe. So, and they're operating in Asia. They've been around for a long time, lots of employees. This is a well-known bank, and they're up 4%. Very good. Very good. $160 billion bank. Revenues there. PE is really low. Banks carrying a low PE. Dividend is really nice. That looks good. For last year, this stock has worked. 28% plus your dividend. Over the last 5 years, it's just been okay. If you add the dividend rate, you're up maybe 50%. That's not bad, but it's not great. But the last year has really been a good year. And in 2023, there was a big bank scare. So I'm sure that had something to do with their stock price going down. So it looks like HSBC is having a good day. I don't invest in HSBC. Right now I'm in Citigroup. I'm okay with my Citigroup investment. And but let's take a look at their book value. Oh, looking at the wrong financial. So book value, they were in the eights, but it's expanded recently to 10.52. That's a very good sign. Their book value is really growing. Good job, HSBC. And the market likes what they're seeing today. That's a pretty good size cap, and it's up 4%. Good to see that. All right. American Tower is a real estate investment trust, and they actually own a lot of the towers that we use when we're using our phones and digital signals and so forth. And needless to say, that's really important infrastructure. These guys own a lot of it. They're a pretty substantial cap at 104 billion, revenue of 11 billion. And it's a real estate investment trust. So I value these on earnings per share, and I want to make sure that their dividend is safe. And it's based on funds from operations, not the traditional way of looking at earnings per share and then looking at the dividend. So I'm going to look at it differently. Before I do that, let's take a look at what analysts think. They think this could be a $260 stock, or I could drop down to 196, which isn't too bad downside risk. On average, they think it's discounted by about 7%. It's having a down day. What was their dividend rate? 3%. That's pretty good. For a REIT, that's not great, but that's pretty good for most stocks. And analysts primarily look at earnings per share. Earnings per share is expected to drop next year. That's interesting because their revenue is supposed to drop. Okay. Maybe that's what analysts are not liking, and that's why the stock price is selling off. So forward P that they're using is 31. Okay. So their dividend is $6.48. Let's see if they give us funds from operations here. So here's funds from operations grew 66%, 64%. This is adjusted funds from operations, but in 2023, their funds from operations was $9.87. Assuming their somewhere near that number, they can more than afford their dividend because it's less than $7. So the dividend is safe. They might even be able to grow it. How have they grown their dividend over the past? They've grown it nicely. In 2020 it was 14. Now they're up to 62. That's pretty good growth. It's pretty darn good. And they've been at 62 for some time. If they're making funds from operations nearing $10 per share, maybe they could move it up. Maybe they could move it up. So, um, overall, I already have a REIT. I'm good. I've looked at this REIT in the past because I like the concept of, hey, communications is consistent. Like we're going to need communications in these towers forever. So, I'm going to look a little closer at this one and see what I find. But I'm going to do that later today and see what I come up with. But it's interesting that the stock is selling off. So the revenue went down. There is concern like that revenue drop next year. That is a pretty substantial concern. Why is that occurring? Is it like, are some of these towers, maybe they leased them, they're losing the leases, and whoever owns them is going to lease them to somebody else for a better price. And therefore it's going to cannibalize or take away some of the revenue. I'm not quite sure, but I think it's worth investigating and taking a look at. It is a bigger cap. So over the past 5 years, you'd be flat. You'd just be collecting this dividend. That's not a good return. Not good at all. For the past year, it's a very good return. If you bought at the right times, you're sitting pretty because you made 25% appreciation plus that dividend. You're doing all right for the past year. So American Tower. All right, let's take a peek at the market and then we'll call it a day. So markets, the NASDAQ's in the green, the Dow's in the red, slightly. S&P is flat. The Russell having a bad day. The Russell had a great day yesterday. Boy, this Russell's got to be more consistent. These small companies. Come on, small companies. All right, so let me catch up here. So you looked into buying puts on DJT. Interesting. Yeah, it's a meme stock. Absolutely. Yeah, I get that SoFi is banking of the future. I'm Yeah, I get that. I get that. I would just like it to be banking for the future, and we're already beginning to grow and make, substantial profits. Because 10 years from now, man, that's a long time from now. The world can be so different in 10 years, right? Yeah, I know what you mean. There's some stuff that, like Robinhood, I'm a stockholder. Also a Robinhood account holder. And when I get on the Robinhood app, I'm like, I can't use this. My brain was wired a while back, and I need to use more of a traditional brokerage that lays things out more in a tabular, experience, looking like a spreadsheet. Where Robinhood is, very like single stock kind of experience, and it's a little bit more like a video game on your phone. And I grew up with video games where upright like cabinets, you played Asteroids and Robotron, and then we migrated to consoles, right? But kids these days are very comfortable just doing 1,000 things on their phones, which I imagine SoFi probably has an awesome phone app, and younger, savers are probably liking SoFi most definitely. All right, everybody. So that is the live stream for this morning. Really active morning with um, some stocks that announced having a good day, some that are not. and it's a little bit of a mystery why some of these stocks are selling off. I scratch my head and go, the earnings announcements look good, but what am I missing? Because the stock is selling off. There's never a dull moment for a stock investor. But overall, it's been really two phenomenal years. 2023, phenomenal returns. 2024, phenomenal returns. So it is certainly worth the effort. Um, I'm happy with my returns this year, and really very few things could happen. I mean, it's highly unlikely we're going to lose 30% value in the next 2 months of the stock market. If it does, then I'll have a bad year. But if, let's say, we just had reasonable, 2 months in November and December, I'm going to book another really, really positive year and on to 2025. Figure out how I could do the same thing for 2025. So, everybody, thanks for tuning in. I appreciate it. And I hope that you guys do well today in the stock market. I'm going to try to come back in the evening and do a live stream to go over those big earnings. And we'll go from there. So, everybody, have a great day. Thanks for tuning in.